Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. On today's show, strategies. Michael Saylor urges U.S. to buy 20% of all Bitcoin's supply. Also on today's show, LIBRA Memecoin Fiasco destroyed $250 million in investor wealth, research shows. Our feature story of today, here's how Bitcoin could skyrocket to $180,000 this year, according to VanEck executive Matthew Sigel. We are also going to talk about where the smart money puts their money and how they use it. All this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is February 20th, 2025, and Bitcoin is in the green, baby. We've got a good pump for today, up a couple percent, and the entire market is pretty much in the green. What I want to start off with today is what the title reads, and that is the smart money. So everybody wants to make money. Nobody likes losing money. So let's go over a couple things that the smart money and what we typically deem as the whales do. So the smart money invests in smart ideas. The smart money goes after the sure thing. The smart money buys the dip. So sure things in this world, things that are going to always make you money. Real estate should typically always make you money. Commodities, specifically gold and silver, should always make you money. Bitcoin should always make you money. Notice how I'm not talking about shit coins. I'm not saying, Shiba Inu is going to make you money. All these things that the smart money does, they do it profitably. When the rest of the people, which the herds, the sheep, as they're sometimes called, when everybody's looking at something, then that typically means it's too late to get into it. So the smart money won't buy Bitcoin, for example, when it's hit the top. If Bitcoin suddenly spikes tomorrow, and it goes up from 100,000 to 200,000, the smart money's not going to buy it. Who's going to buy it are the herds. They're going to jump in late, the way psychology tells them to do. They won't do it when the price is 10,000, when the price goes way down. They'll say, oh no, everybody's selling Bitcoin, that's it, it's done forever. But the smart money buys as much as they can at those low prices. Currently, the smart money continues to buy Bitcoin because they feel that this price at 97, 98K is still a bit of a bargain. Once institutional money starts coming in here, a lot more institutional money, and countries start buying, pension funds start buying, organizations start adding it to their balance sheet as a money reserve. Instead of holding cash, they might start to hold 10% or 20%, or the smart ones would hold perhaps 50% Bitcoin. So this is where the smart money goes. The smart money's buying these things as the price is going down. They're not buying this as the price goes up. You've heard the term buy the dip. In Bitcoin, they call it buy the fucking dip. So effectively, you want to buy the dip. When the price goes down, that's when you want to buy it. Let me give an example. It's interesting how finance and everything else, finance and merchandise works so differently. For example, a good way to put it is a financial product is the only thing that people stay away from when the price is on sale. So the price goes, 30% off at Best Buy. The herds run in to get the, newest TV at 30% off, right? Bitcoin goes down 30%. Nobody's buying it. So this is senseless. Who are buying it are the smart money, the whales. The way they're making this money is by buying these dips, buying things at a discount. So I recommend, guys, buying at a discount. I know people say, oh, you can never time the market. And I'm not suggesting that you're trying to time the market. I'm suggesting that you're buying the dip. So if, for example, you have a dollar cost average outlook, which means you're putting in the same amount of money into something over time. Once a month, you're buying, $200 worth of Bitcoin. Even though you're dollar cost averaging, you still want to look at the daily price. So if the price is up for that day, well, you probably want to wait for tomorrow. You never want to buy when the price is up for the day. You want to buy on a down day, and you want to sell on an up day every single time without failure. No matter what, if you only do one thing, only buy when the price is red and only sell when the price is green. Just by doing this, you'll add potentially 10, 5 to even 20, 30% to your returns. Where else is the smart money putting their money? Well, the smart money is putting their money in easy returns, sure returns, dividends. So they are buying things, and I've said it before, they're buying index funds with a very, very low management expense ratio. Things like Vanguard's VOO, where they're investing in the entire S&P 500, and they're giving you a 8% dividend per year. This is where the smart money's putting their cash. They're not holding it. They're not putting it in between a mattress. They're not leaving it in a bank account. They're making their money work for them. And they'll turn $1 into $1.50. Even if you think of turning $1 into $1.08 over the year because you're getting 8% dividend. Well, it's better than not making anything at all. So having your money in a simple bank account where you're making no interest doesn't make very much sense. Even if you don't have a lot of money, you can still certainly find high interest savings accounts to put your money. At the very least, your money should be in there. But I do highly recommend investing money. Any whale, anyone who we suggest has smart money is not just holding on to cash. They're using their money, they're investing their money, and then that money in turn is making them more money. Another place you can save, taxes, of course. So, where do you invest your money? There are tax-sheltered accounts that every single person in North America should own. This is where you should be investing your money. This means that no matter how much money you make $100 million, you won't be taxed one penny. If you don't use a tax-sheltered account and make $100 million, you're going to be taxed at 50%. So you're only going to make $50 million. Let's break it down to a more common outcome, and that would be, you make $1,000 and you've got to pay 30% tax on that, so you're only making $700. If you have it in a tax sheltered account, you make $1,000, it's your $1,000, period. Tax sheltered account. This is where you should have the bulk of your investments. If you want to invest in Bitcoin, you can also put it in a part of your tax sheltered account. You can buy the ETF as part of this tax sheltered account. And whatever gains you make are yours. Only use this account. Maximize this account. There's a max the government will let you put in per year. It is a big chunk. If you haven't put anything into this for many years, you can actually go back, I believe it's 5 years, and put in the amounts from previous years as well. So let's say your maximum allotted amount is 10 grand a year. Well, and you've never used it. Well, you can actually probably put in 50 grand because you can go back a number of years and max out those years as well, all in one shot. Use it. Tax is taking most of people's money. When you go out and you work, before you even get your paycheck, the government gets paid first. It's the biggest single facade that society has accepted, and maybe in history. And what people don't understand, they think that, tax has been around forever. No, they haven't. It started about 1920, before the First World War, where they needed more money to buy more equipment to send soldiers into war. Before that, there were no taxes. The money was collected from tariffs. Countries would export their products into the States or Canada. The States or Canada would charge a tariff to those countries. Sure, you want to sell us your widgets. Fine, we'll buy your widgets, but it's a 10% tariff. Fine, we'll sell you your widgets, no problem, and we'll pay the 10% tariff. The 10% tariffs would then go to things like building roads, fixing roads, infrastructure, electricity. The same things that our tax dollars currently go to now, the tariffs used to take care of. Now, what happened after the war is they just left it in there. It was originally supposed to be a tax that was only supposed to be placed on the rich, and it was at first, but then it just ended up over time trickling down to everybody. So now it doesn't matter if you make 20 grand a year or 500 grand a year, you are being taxed. So make no mistake, it is the number one way of losing your money is through taxes. So going back to the smart money, what else are the smart people doing? You've got news broadcasts that are complaining. Do you guys remember when they were complaining, Donald Trump, show us your tax return, show us your tax return, right? And then it turned out he paid zero tax. Well, how does he do that? It's not that he's a scammer. He didn't do anything illegal whatsoever. He is smart. That's what he did. He used the system for his own gains. So if you have a corporation, which I highly recommend if you have any kind of business whatsoever, and you can show that your business has created some kind of profit or capital, then you should use this corporation as a tax shelter. All right. So, for example, how did Trump do it? How does a guy like Robert Kiyosaki do it? How do the smart people do this? They'll have a corporation. First of all, you don't have a corporation. Well, use your tax sheltered account. Okay. 100%. Invest only in your tax sheltered account. Number two, if you have a corporation, a very simple way to look at it is if your corporation makes $1 million and then you spend $1 million on your corporation, you buy vehicles, office space, maybe rentals, whatever your company does and can get tax write-offs for, these are the things you want to put your money into. So your company makes $1 million. You spend $1 million on your company, and then what's left to pay tax? Well, tax on zero is zero. So this is how the whales are doing it. Now, when talking about spending on your company, all right, you want to obviously follow the rules, but it's not to say that you made $1 million and you spent $100,000 on a company vehicle. There's nothing there that says you can't drive that company vehicle back and forth from home. Like, this company vehicle can very easily become your vehicle. It doesn't have to sit in whatever office and be, have the name on the side of it, of your company, and then only be driven by your employees. No, this is your vehicle. You can, drive it from and to work. A vehicle is definitely something you require in most cases to run a business. This can be a big chunk. So that's one example. Office space could be another thing. If you're running the business out of your house, well, certainly you can write off a part of your house. You can write off a part of, if you're using one floor for your business, well, then that floor becomes a write-off for your business. If you have internet, well, the internet is being used for your business. You write it off. If you have telephone service, you write it off. If you have, you could probably get away with media. There's going to be a million things. You certainly have to research this. If you want to do this 100% legit and by the book, and I recommend you do, obviously do your research. If you're going to go with an accountant, which is probably a good idea because they will find savings, what you want to do is find yourself an accountant that's already doing or has already done what you're doing in your business. For example, if you have a real estate company and that's your business, don't find an accountant that specializes in, construction or sales or any other industry. Find an accountant that specializes in real estate, who has had their own real estate company, who has their own real estate company currently. This scenario is where you're going to get the best bang for your buck. These guys are doing exactly what you've done. They want to find for themselves what works best. So they've already done it for themselves. Then they can pass that knowledge on to you and those savings on to you. Hopefully we've gone through. Those are really the top things that whales do, guys. They, taxes, big problem. Use a tax sheltered account. Open a corporation. Put your money in smart things, not some shit coins. I've always said, and I've said many times on the show, sure, keep 5% of your money and put it into shit coins. Put it into really highly speculative things, hoping that you strike it rich on one or two of these things. 100%. But the bulk of your money, you need to be careful with it. Put it in only things that you are confident about. Tax sheltered accounts, we already talked about. Needless to say, don't get caught up in any kind of interest bearing anything. Interest bearing credit cards, interest bearing loans, interest bearing mortgages. These are all bank feeders. If you can do your thing without interest, then by all means, that's the way to go. I know there's certain people that, we've got Robert Kiyosaki that effectively uses debt for his own purpose, and that's fine too. He goes a different approach. He basically borrows money, uses that money to buy certain things, most of the time real estate. Then the real estate goes up. He'll use the money, pay off his loan, and then use the equity in the real estate that he bought to get more money, more loans, and the cycle continues. Also, a fair way to increase your net worth, but then you're just putting your faith in the banks. If you can do any of this without the banks, I would highly recommend going that way. I would not trust the banks. I would be putting your money in, financial products with very, very low MERs, management expense ratios. We're talking, the Vanguard total index fund that I've spoken of many times is charging 0.03% MER. And a lot of the mutual funds out there are charging 2 full percent up to even 4 full percent MER. And then here's Vanguard, who's charging 0.03. So they're not taking your money. These mutual fund managers are definitely taking your money. So don't trust the banks, folks. Gold, silver, real estate, Bitcoin, these are safe places to put your money. This is where the whales are putting their money. This is where the smart money is going. And the smart money is, as much as possible, reducing or removing any tax burden they've got. Let's jump right into our market watch and Bitcoin technical analysis now. Before we get into our stories, we have Bitcoin up currently 1.5% to 98,287. Ethereum up 0.5%, 2738. Solana up 2.5%, 173. Doge down 0.25%, 0.75% at 25 cents. And we have XRP also down 1% at $2.67. Moving into the Crypto Bubbles site, that would be cryptobubbles.net if anyone's interested. And they also have an app. We see that for today, IP is the biggest winner by far. It's nice to see some daily movers up 50, 75% again. All these altcoins, and this is what I was saying about putting your money in shit coins. Sure, but 2%, 5%. Don't put 100% of your money in anything, because fine, maybe you get lucky with IP, but there's a good chance that you go the other way and you get unlucky and you're down 40, 50% in a day, then you're brokenhearted. A small percentage, even if you lost it, okay, I'll try again next month, right? Bera up 15%. S, which is Sonic, up 22%. Tia up 15%. Move up 10.5%. Maker up 18%. Zooming out to the week, we have IP up 150%, Bera up 45%, Pyth up 16%, S for Sonic up 60%. And zooming out to the monthly, we have almost everything in the red. And this is what I was talking about. Oh, look at all these shit coins, friends. Everything here is a shit coin. Trump, 60%. Pepe, 40%. Enna, 60%. Even Sheeb, 25%. For the month, we only have a couple things up. Ultima, 90%. Cake, 15%. Tel, 62%. Ohm, 121%. And Sonic, 43%. Moving into our crypto market cap, we have Bitcoin currently sitting at $1.95 trillion. Ethereum at $303 billion, XRP at $154 billion. Solana at $85 billion. Doge at $37.5 billion. Cardano, $28 billion. And Tron to wrap up the top 10 at $21.5 billion. The current total market cap is $3.18 trillion. That's the total of all the money that's in all of the cryptos altogether. Currently, Bitcoin holds 61.3% of all that. Ethereum holds 10.4%. XRP is just under 5% of all that, and BNB token is just under 3% of that. The Crypto Fear and Greed Index, which comes out once a day and gives us a reading of how the industry is feeling. Currently sitting at a 55 in neutral. Yesterday was a 49 in neutral, and last week a 48. And generally, when this number is low, I mentioned just a couple days ago that it was at a 44, and I said, yeah, I bought the dip, and lo and behold, every time I see that number, low 40s, the very next day it pumps. So going back to buying the dip as the smart money, you just have to trust it. And if I bought the dip and the price went down again, well, I'd buy the dip again, right? So you're buying a bigger percentage. If you bought, it's at 100 grand. If you put $1,000, you'd get, 0.0001, whatever it is, right? If the price went up to $200, 200 grand, let's say, and you bought, then all you'd be getting is 0.0005. At another zero, actually, 0.00005. But if you bought the dip at 50,000, you'd be getting 0.002. So it's like buying something on sale. Think about it that way. Do you want to buy it when they're charging you twice as much, or do you want to buy it on sale? Well, of course you wanted to buy it on sale, because the very next day, if it goes back to the price, that the regular price, you've already made money. You're not making, most people think in finance and even in real estate that you're making money on the sale. No, you're making money the moment you buy it. So if you buy it at a discount, you already made money. If a pair of Jordan shoes are going for $500 and you were able to get them for $250, well, you just made $250, didn't you? Because you can get $500 for it. It's the same thing with stocks, same thing with real estate. Buy when everything turns to crap and everybody's selling. That's when you want to buy. When everything is golden and beautiful and everybody's aunt and sister and mom are calling and saying, hey, how can I get some Bitcoin? That's when you want to be selling. The current Bitcoin halving countdown. We have approximately 1,150 days until the next Bitcoin halving, and there's 165,351 Bitcoin left to mine until that time. The last Bitcoin in history is going to be mined in the year 2140, and we are 1,172,972 Bitcoin away from that. The total top assets by market cap, including commodities, we have gold at $19.8 trillion, Apple at $3.6 trillion, Nvidia $3.4, Microsoft $3 trillion, Amazon $2.3 trillion, Alphabet, Google at $2.2 trillion, Bitcoin at $1.95 trillion, silver $1.87 trillion, Saudi Aramco $1.78 trillion, Facebook $1.7 trillion, and Tesla sitting at number 11 at $1.1 trillion. You can currently get 1,018 Satoshis for $1 US. What is a Satoshi? Every Bitcoin can be divided into 100 million Satoshis. So there's going to be one day soon, where one Satoshi equals $1 US. And at that point, Bitcoin will be $100 million per Bitcoin. Looking at the U.S. debt clock, we have a current national debt up $5 billion from yesterday at $36,505,713,000,000, which equals to $107,260 per U.S. citizen, or per taxpayer, $323,047 per taxpayer in the U.S. Now, we have some whales that we like to talk about here. One is a huge Bitcoin whale who takes advantage of both the corporation and he takes advantage of Bitcoin. He is dollar cost averaging, and he'll buy and he'll hold no matter what the price. So his strategy is he'll buy every Monday, and he doesn't care what the price is because he's dollar cost averaging, because he thinks that the Bitcoin price is going up forever. And that is our friend Michael Saylor, who is now urging the U.S. government to buy 20% of Bitcoin supply. This is something that even Trump talked about in Nashville in the world's biggest Bitcoin conference in mid-2024 in the summer. Michael Saylor, executive chairman and founder of Strategy, has advocated for a maxi-size Bitcoin reserve in the United States, arguing that it would ensure cyberspace dominance for the next century and strengthen America's leading power. I agree 100%. Speaking at CPAC in Washington, D.C., Saylor advised the U.S. government to purchase 20% of the Bitcoin supply for the much-anticipated National Strategic Reserve. We talk about that a lot here. There's only room for one nation-state to buy 20% of the Bitcoin network. Yeah, Saylor said, adding that he thinks it should be and will be the United States. U.S. authorities would have to buy 3.9 million Bitcoin in addition to its current 207,000 Bitcoin trove to realize Saylor's vision. That endeavor would cost $392 billion at today's prices, which is just a little bit more than the money they sent to Ukraine. I'm sure if they simply found the savings that Elon Musk and Trump are looking for, I can pretty much guarantee they can come up with $392 billion just in savings. So even if they just kept everything the same as it's been, and find these savings, they'll find this $400 billion, and they could just buy Bitcoin with it. And if that happens, folks, expect the price of Bitcoin to finally hit the moon, go to the moon. And a term that I have dubbed here, created myself that nobody else is using, is the creator candle, which is a move of $100,000 in a day. So you heard it here first. I mentioned it a few weeks ago. People are calling it, the God candle is a $10,000 move in a day. People are calling a $100,000 move in a day the Omega candle, but that doesn't do it justice. The creator candle just rhymes a little better too. The U.S. Senate is considering a more conservative approach. Senator Cynthia Lummis of Wyoming has proposed that the U.S. accumulate 5% of the Bitcoin supply, while President Donald Trump's crypto team is currently assessing the feasibility of a Bitcoin reserve. Yep, he's given him 180 days, and now we are at about 150 days remaining until they come back with their findings on this. At CPAC, Saylor reiterated the U.S. must be the nation to capture 20% of the Bitcoin network. It's a way for us to enrich ourselves and emerge as a creditor nation in a manner of a decade. It's also a way for us to ensure that we're the economic leaders in cyberspace for the next 100 years. I agree with everything Michael Saylor is saying. Saylor explained that the U.S. adoption of BTC will drive a sovereign rush for the asset among both allies and rivals alike. Yes, once the U.S. buys it, everybody's going to want it. All the countries are going to start buying it. Strategy is the world's largest corporate holder of Bitcoin, boasting nearly $50 billion in Bitcoin. The company plans to raise another $2 billion to buy more BTC. So I agree. This guy's a bit of a genius, and let's give him all the credit because he deserves a lot of credit. He's taken his little software, mediocre, somewhat failing software company, and turned it into a Bitcoin company with a Bitcoin reserve, and now he's worth $50 billion. Now, on the other hand, when we talk about the opposite spectrum from Bitcoin, we sometimes talk about shit coins, which are basically, the altcoins. And there was a sad story that came from Argentina on the weekend, where a coin named LIBRA created a fiasco and destroyed $251 million in investment wealth. So on-chain data tracked by Nancine shows 86% of traders lost money, a total of $251 million. Basically, a new meme coin came out on the weekend called Libra coin. I noticed it. It had big volume, and I didn't go toward it and buy anything. And it turns out that Javier Milei tweeted about it, and once he tweeted about it, the price shot up to huge amounts, into the billions. And of course it turned out to be a rug pull. So he didn't have anything to do with the coin. But the creator of the coin basically took all the cash, pulled the rug on everybody else. And, these clowns, this is what they do. So stay away from the shit coins, guys. Like I said, if you're going to take 2% and give it a big risk, by all means. But do not. There's people that have literally put their life savings in these things, and it's just ridiculous. Nancine's data shows 86% of traders lost money, registering total losses of $250 million. Two addresses that bought and sold quickly on February 14th made over $5 million. There you go. Right? But 86% of the people lost their shirts. The Libra meme coin scandal that rocked Argentina over the weekend destroyed millions of dollars in investor wealth, according to research by Nancine. On-chain data tracked by Nancine showed 86% of traders lost a total of $250 million, while the winners secured just $180 million in profits. Right? In other words, it was a net negative wealth-generating event that potentially sucked out liquidity from the market. So in these situations with these shit coins, guys, who's making the money here? Whoever starts these coins. It's 100% or in this case, 14% insider trading, and then the other 86% loses their shirts. The episode is a stark reminder that tokens associated with political figures can be just as risky as random meme coins and celebrity cryptocurrencies in making or breaking fortunes within minutes. Libra debuted on Meteora, a Solana-based decentralized exchange, last Friday, and quickly surged to a market cap of over $4.5 billion after Argentina's President Javier Milei said on X that the project backing and the coin would focus on encouraging the growth of Argentine economy, funding small businesses and Argentina ventures. Over 40,000 crypto addresses piled into the tokens, fueling a surge in price. The bullish excitement, however, was short-lived. The balloon popped as insiders offloaded massive numbers of tokens, tanking the market cap by 90%. Milei eventually deleted his X post, saying he was not aware of the details of the project and, now informed, has chosen not to continue promoting it. By then, though, the damage was done. The opposition called the whole affair an international embarrassment and threatened to impeach Milei. 70% of wallets trading Libra from February 16th to 18th ended with a realized losses, as many likely attempted to profit off the additional retreat from Javier Milei, Nancine said in a report shared with CoinDesk. The number of unique holds of the token fell to 35,000 on February 18th from over 50,000 on February 14th. Meanwhile, two wallets that bought the token at 2201 and sold by 2244, so they kept it for 3 minutes, made just over 5.4 million total profits, the report noted. So it also shows you that there's a time to get in, there's a time to get out. Don't get too greedy like these, who knows, kids, adults, I don't know who they were, but they put their money in for 45 minutes. Probably some of the founders, potentially, or insider traders, put it in 45 minutes, made $5 mil, pulled their money out. So, how much is enough? You have to ask yourself. And how much greed do you really need to seek before being fulfilled? So it's a fine line. At $5 million, you've done okay. Most people at a few $100,000, you've done okay. There's this fear of missing out. But, maybe this guy went to the washroom or took a shower and then came back and was like, oh my God, I made 5.8. Sell, right? You don't know what the actual situation was. Chances are, if they bought it and they sat there and watched it and saw it go up to $1 million in profit, they would have sold right then. So it's very possible they walked away for a bit, came back and checked, and an oh my God moment, and sell, and came out looking pretty, unlike 86% of the other holders. Now, VanEck, when talking about more stable, robust currency, Bitcoin, that has the 61% of the total crypto market dominance, has come out with a excellent prediction, which is still below my bearish target for this Bitcoin cycle, but certainly way up from where we're at, double the price of where we're at. Let's get right into it. Here's how a Bitcoin could skyrocket to 180,000 this year, according to VanEck executive Matthew Sigel, the head of digital asset research at exchange traded fund issuer VanEck, says Bitcoin has more upside potential. Yeah, no kidding. In a new interview on the David Lynn report, Matthew Sigel says that over the near term, Bitcoin could go up around 87% from the current level of the year if the flagship crypto assets behave like it previously has during the past 3 cycles. And we've gone over this, and according to, if we're going to follow historical patterns, my bear scenario is, let me bring it up here, I think it's 270,000, and then my bullish scenario is into the 300. So there, my bear scenario 220k, my bull scenario 378k, and this is based on a 3x from the halving date. That would be the $220,000 prediction, and a 6x from the halving date, which is 378,000. And how I came up with this, I didn't just pull it from thin air. The very first halving, we had about a 19x from the halving date to the cycle peak. The next halving, we had about an 8x return from the halving date to the cycle peak. And as we see on the right hand side, we've got the low and the high. And then the third halving, we had approximately a 7x from the cycle, from the halving date until the cycle peak. So I kind of broke it down into 2. I thought, okay, since we're seeing, from the first halving, half, 19x, 8x, but then it went 7x. So, okay, let's go 6x. So that's where I got that prediction from. And then I thought half of the 7x, since it's been decreasing each halving event in terms of the percentage that it goes up compared to the previous halving. Okay, let's put a 3.5x, and that's where we get the 220. The 6x is where we get the 380, just to explain where I got my math. Again, this is all speculative. What I recommend is financial literacy for everybody more than anything. So you can go out and create your own charts, go out, get your own information, and be confident about your financial abilities. This is something they don't teach you in school, something they should be teaching all the kids, which they don't, and something you should be teaching your kids and your friends and maybe your parents, to be honest. In the near term, we do tend, this is getting back to the story, to assume that the 4 cycle will hold until the market tells us otherwise. And the most explosive part of the Bitcoin cycle tends to happen in the 1 year after the halving, which is currently now. The halving was in 2024, and now we're in the year after the halving. So we had the last halving in April of last year, and there was a nice election-related run-up. 2025 should also be a stronger year. The question is how strong. Each cycle for Bitcoin has produced smaller and smaller returns. The previous smallest ever cycle was 2,000% through to the peak from around 3,200 to 69,000. So if we assume a 1,000 price return, that would be roughly 180,000 for this cycle. So that's our base case, just how my base case was 220. My best guess is 1,000% from through to peak is a reasonable case for this cycle, likely peak out in Q4 of this year, as historically it has, right in around between October and December. But again, you don't want to wait until the price dips. You know, if you've made a fair return and it's October and things have run up quite a bit in the price, maybe it's time for you to jump. Maybe it's time for you to say, okay, you know what? I made enough. Even if it goes up another 50 grand, 100 grand. Well, you know, it's this fear of missing out. At what point do you get out and are happy with what you accomplished? Over the medium term, we benchmark this asset to gold, and specifically the 50% of the gold market that's used for speculative purposes rather than jewelry and industrial purposes. So if you assume that Bitcoin can surpass that kind of 50% of gold market cap level, that would be 450,000 per Bitcoin price target. So that's our medium-term assumption for what Bitcoin can reach over several years. So currently, we've got Bitcoin at $2 trillion. We have gold at 20 trillion. So it is 1/10 the market cap of gold right now. Bitcoin is trading at 96,500 the time of writing. So fair understanding from VanEck. He has a similar kind of outlook as me, and I feel like that's probably a fair target, 180K. There's other much more bullish targets out there. We're talking about 1 million, even 2.5 million for this cycle. So take it with a grain of salt. Certainly, it's possible. Anything's possible with Bitcoin. It's on its own vector. If we start seeing nation state adopting, you know, U.S. adopts it, half the world starts adopting it, pension funds start adopting it, banks start using it as a reserve, this thing could go to the moon. We could definitely see these, you know, multi-million-dollar prices, and hopefully all my listeners out there are the ones that get in early and, you know, beat the race to Bitcoin, beat the banks to Bitcoin, beat the governments to Bitcoin. You get in early and you ride it out. You take a bigger risk, you get a bigger reward. That is generally what life is about here in North America. I mean, you're never going to do anything without taking a bit of a risk. Big risk, big reward. Small risk, small reward is generally the rule of thumb. And remember, please, that money is abundant and money is everywhere. There's about $700 trillion of worth in the world. What is not abundant is your time. So time is very scarce. Use your time wisely. Also, spend less money than what you earn. We didn't talk about that. Live modestly. If you do that, then you'll have a better chance of being rich, of using your money wisely, being part of this smart money. If you start making more money, which is great, start saving more money. Don't start spending more money, and start saving when you're young. Start saving when you're 20, and hopefully by the time you're 40, 45, you can retire. If you've got a great idea, start that great idea today. Don't wait around for tomorrow. Start today. Even if you're not ready, start it up. Things will slowly progress the way you want them. Hopefully you found the stream useful, guys. And let me be frank, I am on a bit of a mission to get to 500 or more subscribers. And it's going to happen with or without anybody. However, I would greatly appreciate if you enjoyed what you heard, and I'm going to keep bringing more financial literacy to this program as much as I can. Please do subscribe to this program. It would mean a lot to me. Please share, like, comment, and subscribe, and we will see you on the next stream. Thanks so much for joining.